Cloud adoption is booming in Southeast Asia with 22.5 billion US dollars in investments. But compliance costs are climbing too, which could cancel out the savings, especially for smaller firms. To share more insights on this, we have Sonny Singh from Oracle Financial Services and Suraj Ashoka from Morder Intelligence. So, what challenges do banks face in balancing cloud costs with compliance costs?
So the major issues that we currently find in this industry are the regulatory complexities as well as the security and compliance risks that are being posed to the banking industry, wherein banking institutions are operating in multiple geographies, and that being said, they have to be abide by different regulatory norms that are in place in these geographies. So the cloud adoption needs to be agile in a way they can adopt for the multiple regulatory frameworks across the regions when working in these geographies, also from the security and compliance risk. While the cloud adoption do brings us the scalability and the flexibility option to these banking institution, but at the same time, it also poses the security and compliance risk as well, where the data protection of their clientele is very much important to safeguard.
There's increasing regulations that pertain to resiliency and recovery from adverse events and from data residency or sovereignty, as it's called. So these are all challenges that both large financial institutions as well as small financial institutions can face. And you know, there's a tremendous opportunity if you have the right technology partner. They can participate in helping you defray some of the challenges associated with the cost. So, as an example, I'll talk about Oracle. Oracle has a very long heritage in managing the most sensitive data for both public and private sector companies alike. We have done a lot of work in establishing footprints across all the regions that we operate in. In Asia, as an example, we have 12 public regions. And in addition to our own public regions, we work with Azure in a multi-cloud environment in 3 interconnect regions and with Google Cloud in 5 interconnect regions. So we've really spread our ability to serve our customers in all the possible geographies that allows them to really work with us with their data sovereignty requirements in a systematic fashion.
In this kind of scenario, larger players would usually have the upper hand. So, how can smaller financial firms compete with these players in cloud adoption?
So, in order to control the overall operation in terms of the cloud adoption, the smaller firms are currently leveraging the public cloud services, which are comparatively offering, wherein the small firms are utilizing these offerings to access advanced technologies without the need for significant upfront investments in terms of the infrastructure itself. So this is actually helping out them to compete with the larger players. Also, in addition to that, we have also observed many of the smaller financial institutions are focusing towards the niche segment of the market, wherein their target audience are at the smaller level, and they are providing an customized offerings for these target customers, and which is providing them an edge when compared to the other larger banks. And also, we have observed there has been a considerable amount of collaborative partnership with the many fintech players and the smaller financial institutions, wherein they are collaborating their resources in order to provide a seamless solution to their customers.
I have to say that, cloud adoption in general democratizes the access to leading infrastructure, leading application capabilities, because institutions, regardless of their size, can work with cloud providers to adopt these capabilities. I think where you have a bigger challenge in terms of the costs, in particular, which help you, which can inhibit you from adopting cloud, is in the area of AI. AI is increasingly a very expensive part of your cloud infrastructure requirements, and this is driven by the amount of data that you need to bring to successfully deploying AI models that can support your business. So not only are you dealing with very large language models, you're also bringing in your own enterprise data to further augment and get better outcomes. Now, this is where the challenge lies, and the cost of AI infrastructure is sometimes it exceeds the value that it might provide unless you are careful about it. In the area of cost of AI infrastructure, we have been able to demonstrate a very good price performance equation. And in fact, it is the best price performance equation. And so when you really think about it, because of the speed of our infrastructure, which is based on very modern network technology and very modern compute technology, we are able to reduce the cost and the time.
Now let's also talk about managing increasing cloud maintenance costs. What strategies could help financial institutions with this?
So as you increase your cloud adoption and you bring more and more of your business capabilities and your AI capabilities to the cloud, some of the other costs that kick in are integration costs. As you bring more applications to the cloud, you have to integrate those applications. So there's cost of integration sometimes across different clouds that you might have picked. Secondarily, you may have ingress and egress costs for your data coming in and out of cloud environments so that data can smoothly exchanged between applications. Now, these are significant costs. And what Oracle has done here is we have actually built up the largest portfolio of capabilities. So we have not only cloud infrastructure and the world's leading data management database capabilities, we also have the broadest portfolio of applications, whether these are enterprise applications like your human capital management or financial management. All of these work seamlessly on OCI, taking advantage of OCI, Oracle Cloud Infrastructure features. So this greatly reduces the cost of integration. This allows them to move data very simply across applications, and it drives down the cost of ownership.
So in order to maintain the cost and to have a overall control of the cost, the banking institutions are currently adopting to the predictable cost structures, wherein the AI tools are being used within the cloud services, which also tells them about the overall cost analysis and the expense analysis as well, by which they can upgrade and downgrade the cloud services as and when the needs arise. Also, these institutions are also adopting to the hybrid cloud models, wherein they are deciding on the which data should be stored in the on-premises and which should be moved to the cloud space. So this also helps in order to overall control the cost that is being associated for the same. And the continuous monitoring and optimization of the overall expense is something that the banking institutions are currently adopting, which is resulting in the overall control over the regulatory compliance as well as from the overall cloud services.
Thank you so much for joining us today, Sani and Siraj.
Thank you for this opportunity. Appreciate it.
Thank you, Dan. Thank you, Dan. That was a pleasure.
Once again, those were Sani Singh, Executive Vice President and General Manager at Oracle Financial Services, and Suraj Ashoka, Senior Research Analyst for ICT at Morder Intelligence. For more news, visit asianbankingandfinance.net.